All right, very good day. Hello. Very good day, Taipei. How's everybody doing? Come on, I believe Taipei requires more energy than this. It's a very good day, Taipei. How's everybody doing? That's more like a... It's always so good to be back to Taipei. So I have to say, first and foremost, aside from the scenic view to the food, the night market, I'm constantly hungry when once I touch down Taipei. But of course, what's really more important is I think what really draws me the closest will be none other than the warmth and the hospitality of the people. I think in Taipei, the one thing very distinctive is that it's seeing how people just come together, cultivating kinship, friendship, and this is something that what is truly, truly amazing. And this is where I truly believe that Taipei will be the Asia Web3 blockchain hub. Do you all agree? Absolutely. So yes, yeah. So it's good. Once again, congratulations to the Bu Zhi DAO organizing team for pulling off this inaugural Taipei Blockchain Week successfully. It's just an incredible feat. So first and foremost, just a quick intro. I'm Adrian from Metapac Group. We are ASEAN ecosystem builder, where we help support and invest in early stage Web3 companies across ASEAN as an APAC. And today, yes, this is it. I have incredible, amazing panelists, brilliant minds of the Asia finest as a venture capitalist to be joining me on this session. Now, just to really set the context right, when I was first given to moderate this session, and when I first saw this title, there isn't a better time to really have this title, especially during this current market condition here. Now, when we think of VCs fundraising, we often think in California or even in San Fran, so that's where most of the deals are being sourced out. But in recent years, of course, there's a major shift. There's the pattern and trend that's gradually moving right from the west to the east. And of course, this is due to the tech-savvy population, the rising middle class as earners, strong and powerful entrepreneurship spirit, also high users-driven growth that creates a substantial demand from the investors. And this is where making Asia the thriving hub in the world. Now, given that Web3, it's all borderless, permissionless, and trustless, this gives also immense opportunities to venture capitalists to broaden its horizons, to exercise cross-boundary investments. However, with the cultural differences, users' behavior differences, and also the founders' mindset differences, the real question is how VCs are going to weather and navigate this decision making. And I think this is where today joining me is none other than these brilliant minds and also influential voices in the Web3 space. We have Adrian Lai, the founder and managing director of Newman Capital, Ben Wee, the vice president of Crypto.com, Akio Tanaka, Infinity Ventures Crypto, and also Ivan Lee, the founding partners of Red Building Capital. So first and foremost, just to really set the context, welcome, gents. Yes. I think the first things I want to ask is, are there any differences between the venture investing between the West and the East? If they are, what are the distinctive differences?
Okay, can I take this one first?
Sure, yeah, absolutely.
So we actually have two phases. So we have a headline, which is actually global VC fund, with our bases in Europe, North America, Latin America, and Asia. So we have actually our colleagues in other continents that are basically the west part of the equation. And then we have our crypto fund, which is actually a global fund, but mainly based here in Asia. And I can tell you, the biggest difference, I think, between Western way of investing and I don't know if it's Asia, but Eastern, but Asian way is that things are much faster. Typically, I hope I don't have anyone from my U.S. colleagues here, but basically, by the time, typically in U.S. and European fund, by the time they set up a meeting with the founder, which sometimes they do it over email, we have already done the meeting, and if anything, already ready to send out the term sheet. So speed is very different. I think it's because Asia, even before crypto, had a very strong chat culture. So you are not wasting your time communicating with founders with email. But surprisingly, email is still popular in Silicon Valley. I think that slows down your communication channel and the decision making. So that's one very practical difference that I see.
And that's why Web3 people are using Telegram, right?
Yes,
we just close deals so fast via Telegram, right? What about the rest of gents? It's like, yeah, Ben, yourself?
Yeah, so I think some of the key differences that I observe is like, the ability in Silicon Valley, because there's a lot of liquidity, right? What we're seeing is that, valuations in the West tend to be a lot higher than what you're seeing in the East. And the multiple that you see between like the seed round and the private round tends to be a lot bigger in the US. So for instance, like a US deal could be like 50M FDV in the seed round, and the private round goes to like $1 billion FDV after, right? Whereas in Asia, you're seeing something a lot more reasonable, like between like maybe like 1.5 to 2x in between rounds, right? At the same time, I think, at least from what I see, like in terms of the way that people choose to construct cap tables in the US, in the US, it tends to be a lot more like lined up. So the first round is always like your tier one, funds, followed by the strategic round at a 20x higher valuation. And the strategic investors tend to be people like market makers, exchange funds and stuff like that. So these guys are left holding the bag, right? Whereas I think in Asia, what you're seeing is a lot more fairer cap table construction, so whereby founders bring to the table investors that bring the value that they want as a result of these the strategic value that they bring, right?
Well, can I just actually question, is the valuation in Silicon Valley higher just because of liquidity, or is it because they actually tend to be building bigger global platforms as opposed to similar projects here in Asia? I
think you're right. So part of it is liquidity, much bigger funds with bigger AUMs, ability to chew on bigger valuations. But at the same time, founders in the US, I think generally are more innovative, more sophisticated as well.
Yeah, so echo to Ben, I would say like a higher valuation in Silicon Valley, probably because all the like products or like companies there, they have better chance to have a huge asset, in terms of like global market or like get listing on Nasdaq or something. So that's one of the reasons like they can chew on like higher valuations and better chance to get asset. Yeah, that's one. And two other significant difference between East and West investors, what I see is, Western investors, they tend to invest in the idea, even it's just the idea stage. So early enough, to support founders, to take some risk, more risk, than Eastern investors. So Eastern investors, also, VC funds or angel investors, they tend to like put in money when the product is more, mature or like more commercialization. So I would say that's a key difference. And the other one I see especially in crypto investing, Eastern investors tend to do a group, more like a syndicate or something, like all the VC partners we invest together, bring value to the project, to the founder, to make the project thrive. So we don't see that that often in the West. But I'm not sure about if it's 100% correct. Maybe Akio can add on something, but that's what I see, some key difference.
I know, actually I agree. The cap table over here tends to be massive. It's a club deal as opposed to one lead VC and just a small number of followers.
Thank you. I actually echo on Akio's point of view in terms of how fast the market is going to be in terms of fundraising, because I always compete for allocation of IVC. I think in general for West versus East, overall the crypto market is getting faster and faster in fundraising. I think the US market is adapting. But there are 2 points I actually observed over the past several months. The first point is if your portfolio in US, you want to get investment more and more from Asia. Because you're seeing investors like, to name them even, Sequoia, Jump, are getting much more tricky in terms of fundraising, in terms of backing some portfolios. And some of the projects in the US actually want to get investment from Asia, not just from VC funds, but also from communities, DAOs, and which can really support the portfolios. I think US is very used to, or the West in general is very used to the way of Wall Street, that you want to get a bunch of cap table names without helping you much in terms of value add. And the second point is, I think East is different from West in terms of the vertical differences, that we have gaming focus in Southeast Asia, we have DeFi focus in Hong Kong, Singapore. In US, it's just a mix of narrative that is compiled by a bunch of funds. So for example, if several funds in Silicon Valley wants to push for social, it's going to be social for the whole US. Then you can see deals from DeFi or gaming coming out from there because they want to focus on social. I see a variety of diversification in Asia that will lead the way, and at some point, East will surpass West. I actually think that we already surpassed West.
Now, so Adrian, you spoke about fast and speed. I have to really second to that. Now, I have personally had experiences of raising money in Silicon Valley. And to my surprise, it was so fast. So in Silicon Valley, they have this handshake protocol. You guys can Google search that. And so the moment when they give that handshake means that, all right, the deal is secure, and that's it, they cannot bail out. But however, based on my personal experience, when I fundraise in ASEAN or APAC, it's so lengthy. It's so lengthy. But you know, like moving towards being speed, and we're talking about in the space as a Web3, it's really all about speed. But too often, VCs have to put on more of a common sense hat in really making that sound decision. Now, I think first and foremost, the first question, let's break down into different parts. What can we learn from the past, and how are we going to improve from what the history has really taught us, and to really put us to be, as a VC, to put us in a better position to make a more sound decision. And secondly, well, fast investment decision too often will lead to a very rash, reckless investment decision.
You're asking two questions.
Absolutely,
right?
there are two questions over there. Yeah.
Just checking.
Yeah.
I can maybe take the first one. This might be a controversial point of view, right? But we are now living in this multi-chain environment, and then we are investing across different ecosystem on different chains, thinking, okay, the market is big enough, so ultimately we'll have many players. But that's never been the case if you look at the history of technology. Usually, like even the beginning of a PC, there's multiple operating systems, but really conversed in Windows early on. Now, Mac OS was just a rare, minority, and it only regained presence in the last maybe 15, 20 years. And then Android came, and iOS came, and then there was a few others that showed up at the same time, and really now only two dominant ones. And so, because there's so many, and usually the ones who died are not necessarily the technologically weaker ones. Sometimes there are other better operating systems out there, but they never gain dominance. And I do think that, so I'm contradicting by myself, because we do invest in multi-chain scenarios, but I think ultimately somewhere, if you look back in the history of technology, there will be, I think, emergence of small number of mega platforms where a lot of activities converge, even though they may not be the best technology platform, like Ethereum, with all the problems and all the scalability issues still dominant today. So that's one thing I have to keep reminding myself as we make bets on so many different chains.
Well, I can echo on that as well. So I think one thing we can learn from the Web2 space is how we can mimic the Web2 space in terms of the track record they have. And first one is the multi-chain universe, whether we're going to be cross-chain sometimes future. I'm an ETH max myself. I believe sometimes a decade later, it's going to be just single chain, whether it's Ethereum or not. But we still invest in cross-chain. So we invest in multi-chain messaging protocol just recently out of the US, actually quite a good one as well. But then the reason is depends on the horizon, the investment horizon, whether you're looking at the 5 years or 10 years horizon. I think 5 years time, you still have Polygon all this existing, and we are a big believer in Polygon as well. But the second thing is not just on the base layer level, but also in terms of the narrative going forward. You see gaming was huge in Web3 space, but we see looking at 2012, the Facebook stage, where there's an explosion in users actually brought by social. So I personally believe that if you want to have a huge consumer base or audience base in Web3, social has to pick up. And you won't invest in a decentralized trillion for now, you invest in the infrastructure. So if you think back from the Web2 perspective, you kind of figure out the narrative yourself. And that's the lesson I learned, not just trying to be the innovator in the space, but you learn from lessons in Web2.
Yeah, maybe I'll take the second one. We were talking about like speed and fast investing process, right? So from my own experience, so for example, right now it's bear market, but talking about like bull market, for example, like last year or in like late 2020. So actually, like I give my team, investment team, research team, like 6 hours. When we reach out to the founder and then have a first meeting, 6 hours. Within 6 hours, we need to make a decision whether we move on or not. If we move on and then pass the deal, and then if we want to like process forward, we need to like give our response in 6 hours to like like set up next meetings to do all due diligence and then make the investment decision in 2 weeks. That's in bull market. But
I'll send you my deals.
Bull market. But right now, like when my team like told me, hey, Ivan, like is this, we are like moving forward on this deal. Just chill a little bit. How much runway they have still? Okay, 6 months. Let's wait another 2 months, right? So when they get hungry, we can get the better deal for sure. But like all the fundamental like due diligence is still the same. Like what are the investors backing your projects? Like how strong is how robust is the team, and what's your audience, like target audience? What's the market size? It's all the same. But what's significant different is those tokenomics, right? What's your business model into your crypto project? So it's tokenomics essentially. So how good is your tokenomics, and how can we help? That's also like the angle like we are looking at.
So even with one of my very recent findings, of course, as we have been talking about where most of the funds, as the deployments are taking place in the West. But very recently, this year itself, there have already been approximately about 54% decline in terms of deal sourcing just right in the West. And of course, we're also seeing there's a major shift that the paradigm shift that's taking place from the West to the East side. Of course, some of the main contributing factors are, for instance, it's the huge tech-savvy population. Like if you go, I just recently came back from Vietnam, and Vietnam is 70% of the population is below 40 years old. Like the GameFi, the social-fi is just so robust. Everyone's just talking about development and all that. And of course, that's where really attracts the huge money from the investors. And of course, if we move our landscape a little bit over to Indonesia government initiative it's incredible. It's like they have 25 as a centralized exchange, and of 226 cryptocurrencies has been well accepted by the government. Now, do you see this major shift that's really moving from the West to the East? And do you believe that the East is where going to be the pivotal hub and the frontiers of a Web3 economy?
Well, I think one obvious place we can check is just look at the global trading volume of various exchanges. All the top ones
Absolutely,
are here in Asia.
In Vietnam and Philippines. Vietnam is 1/5 of the populations are crypto traders.
Yeah, so I think a lot of we are starting to see founders in Asia start to become a lot more sophisticated, continue to create more innovative products. But at the same time, I think at the center of the world is always the US, right? Strong, innovative products that they're building, and then very big sources of liquidity to kind of support these projects. Whereas when you think about Asia and and the US, right? The US is like a single market, right? So there's a lot of concentration of founders and liquidity there. Whereas the rest of Asia, geographically speaking, right? It's like pockets of founders in Taiwan, Hong Kong, Singapore, Indonesia, Philippines. Each of these countries, each having a certain theme that they're more focused on. And Adrian mentioned about DeFi in Singapore and Hong Kong. Philippines is more and Vietnam are more gaming focused, right? So that being said, we are starting to see this move towards more Asia capturing more fundraising, right? But at the same time, this will be very sector focused, I think, depending on the market that you're going to within Asia.
Yeah, I actually like Ben's point of view of this. So, giving a fun fact is talking about crypto adoption, the adoption rate. So here in Taiwan, it's around 5 to 6% of the populations. In the US, it's around 30 something. So imagine I'm not sure about you guys know, it's in Korea, the crypto adoption is around 80%. 75 or 80 is crazy. So all the users in terms of GameFi projects or DeFi protocols. So another fun fact is YOY, year-over-year growth rate of DeFi users. Taiwan is actually the top 3 in Asia. The result is by the Chainalysis internal report. So yeah, so a lot of users growing, and then a lot of users here in Asia. So talking about where is the market? So market's here. So we will see, significant migration, the funding, all the founders, like probably from west to east. But given the stats Arthur just mentioned, so 55% drop, right, in this year. But think about that. So this year, everything drops. So probably it's just like total investment drops everywhere, but it's not a migration. Possibly, we need to do more research on it to justify our point of view.
I actually think that we all talk about how Asia is good, and I'll talk a bit about the bad things in Asia. Well, I think in general, there's a lot of scams happening in Southeast Asia. Well, that's true. And at the same time, I think Southeast Asia is trying to find the positions per market. I think we talked about that before in Vietnam, actually. It is, everyone wants to be a hub in Southeast Asia. And Vietnam, Indonesia, Philippines, Malaysia is probably not the best place.
I think Malaysia is the land of Ponzi scheme and money gamers.
So Indonesia, Philippines, Vietnam, they all don't recognize Singapore as a leader.
Absolutely.
And that's already an issue in Asia, that market is fighting with each other. Taipei, Singapore, Hong Kong. The reason that I'm in Taipei is to look at Taipei, the resources, but I'm originally from Hong Kong, right? So I think that is the one thing that might, not just in Web3, but stepping back in all industries, Asia is competing with each other, while US is quite cohesive among a certain small circle in Silicon Valley and New York, depending whether you're talking about tech or Wall Street, right? But I recently see in decentralized social particularly, all the leading projects are led by Chinese founders. Cyber agents, mass network, galaxies, all the toppest ones are actually Chinese founders. So I see that there's a change, which is a good thing in Asia. The narrative is starting to led by Asia, different from the gaming industries, which Web3 gaming was in US. So I see a difference there, but trying to look at both perspectives.
That's the reason why I'm never in Kuala Lumpur, Malaysia, because it's just so difficult. If you're in KL trying to do business, it's so difficult to tell who is the authentic and who is the non-authentic ones. And that's the reason why I'm constantly just out of Malaysia. But I think that's where it's our role and responsibility is either be it whether as an industry leader or also as an investor, is to constantly and continuously to advocate, empower, educate project builders to really build blockchain-based projects out of humanity, and so to impact the livelihood of the people, the society, and the future generation. Because come and think about it, right, guys? I mean, blockchain was really founded by the greatest financial depression in 2008, and why not make the best out of it? And I think that really goes a long way. But of course, intention versus greed, that's always something to be debatable. And I think the million-dollar question is, before we go into founders' perspective, I think a lot of founders here, a lot of project builders here, so we'll sort of dive in into understanding more on the project builders' perspective. So to really cross-boundary investment, to achieve that, with the cultural differences, with the founders' mindset and behavior differences, how can VCs, investors, to achieve this approach strategically and hopefully effortlessly in this Web3 space? Because it's rather not going to be simple to just try to make a comparison differences between how the Westerners and how the Easterners project builders think. How do you go about that?
Sorry, so the question is... Sorry, so the question is, how do East versus West investors think, or?
No, so to achieve a cross-boundary investment in the Web3, right, there are a lot of project founder differences, mindset and behavior. Okay. And how are we able to achieve that effortlessly and also in a very strategic manner?
I think we are trying to understand what the question is. But if the question, if I interpret the question as, okay, so we have diversity of founders in Asia as an international investor, investing across this region, how do we go about it? Well, actually, at the end of the day, yes, there are differences, but to the extent, I think majority of investments we are making, we are not probably not investing Vietnam market only Web3 project. We are ultimately investing something that can scale globally. So at the end of the day, we still apply same basic principles. I think when we look at the team, obviously we will look to. This is actually the issue. Some of the mainland Chinese founders, if none of them speak English, can talk to international investors or community. We see it as a red flag. So we always look for example, founding team. It's okay if the founders from the mainland China have a strong maybe developer background, but he needs to be partnered with other team members who can help him or her go global. So I think team being international capable, I think, is a very important factor we look at in every deal, regardless of which country they come from. And unfortunately, that's an area, actually, Japan is very weak. Japan's more domestically focused, so we are actually always encouraging teams from Japan to, if they can do it, it's fine. Just get international members to the team. I think that's one easy way to solve the problem.
Yeah, so I think by nature, most institutional investors are international, right? So even if you come from a emerging market, most of the time you studied in like a global hub like Hong Kong, Singapore, the US, Europe. So to the extent you are able to communicate with these international investors. So if you think about like very domestic markets, for example, like Japan, as Akio has mentioned, Korea, some of these guys, they're not able to, communicate, like the English is not very good, right? So they're not able to like share across their ideas to like institutional investors in the right way. So to that extent, right, their markets are limited to the domestic markets that they operate out of. Whereas, so the implied like market size that you're able to capture, right, is quite small. So not really within the scope of what international investors would want to invest into.
Yeah, I can add something on that. Talking about like the difference between Eastern funders and Western funders. So what we found is Western funders, especially in Silicon Valley, those deals, those funders. So before the meeting, they send out all the blurbs, adjust who's attending the meeting. So everything is so clear, and then the project itself tend to auto run itself. But since I'm in Taiwan, and then we saw a lot of Taiwanese great projects. I mean, like with the great technologies, great products, but maybe something lack of go-to-market strategy, something like poor communication to outside to the global investors. So if we found something like this, if we can help, we help. For example, like if you are a brilliant BD guy, you speak like multiple languages. Okay, we find you a CTO, right? We find you like some co-founder level. I'm tech guy, right? But if you're a tech guy, you're an engineer, brilliant engineers, probably like information like gold medal or something. So we find you some better communicator, say CEO or like CMO. So you better like provide value to the project. But if not enough, or if just the project needs too much help, we probably just pass the deal because out of our own capacity. Yeah.
I think where you are coming from doesn't matter 90% of time, because we don't look at race as a factor when we do due diligence. But it depends on vertical as well, because if you're looking at creating DEX, obviously you're US, you're Chinese, you're Singaporeans. As long as you're more international citizen, that works. But if you're looking at for example, an NFT marketplace gonna bridge Web 2 with Web 3, I will look at market-specific, factor. So if you're Vietnamese looking at trying to bridge Web 2 companies, the Chinese can't get in that market. So it's really depend on verticals. For example, creator economy. I don't look at much Asia creator economy companies, but more in US, because creator economy in general, from a Web 2 sense, already is built up. So for example, recently we are looking into a creator economy company in US, which is working NBA athlete, and also the NBA Player Association. If you are a Chinese moving to US, you can't get that relationship. So it's really not, even Web 2 is borderless, it's permissionless. It goes back to fundamental that whether the founders have the relationships to pull triggers. So sometimes you might, if you're an investor, you're not able to identify these factors, you might as well invest in something that is borderless. Really, DEX, invest in Uniswap per se.
What about policy makers and regulators come to place, working together with industry leaders to really shape this impact, Dan?
I can talk about that because I actually was recently in a panel in Japan, and Japan actually was, I think, one of the first industrialized nations in the world to actually create, for example, regulation for the crypto exchanges. And by the way, one small impact of that is that so I think Japanese users of FTX actually may be saved because FTX Japan was separately regulated in Japan. And as a result, I believe the Japanese users' accounts are actually safe. And there was a recent news in Japan that they should be able to get their money back sometime in the future. We still don't know the timing, but that's just one fringe benefit of actually having a regulation. And then recently, Japan has announced several regulatory frameworks for stablecoins in Japan. So we actually have one portfolio called JPYC, and they're actually licensed player already. So I think while regulation can also cripple the industry, but if it's set up right, it actually does create an environment where business can be developed without players wondering, well, is this going to be shut down next year?
Yeah, so I think thinking about Crypto.com as a business, right, we are actually regulated by Singapore's Monetary Authority of Singapore. And I think the Singapore as a regulatory jurisdiction is one of the strictest in the world. So it's quite impressive that, we have a global exchange and then it's regulated in Singapore, right? So I think some of the people that I speak to in Singapore that, have actually mentioned about how our regulator, MAS, has been quite consultative in nature, right? Whereby they kind of organize like these industry consultations to understand, different topics like stable coins, exchanges, market makers, and then, in the process of licensing a number of these big players. So I think the answer is that yes, we need to basically have a very clear regulatory framework, and then, and to that extent, right, Singapore has a bit of that, right? To the extent that a lot of people, projects want to be setting up their operating companies and foundations in Singapore.
I'm going to shit on Singapore. Sorry, how is Singapore different from Hong Kong? I have a question to Adrian, since you're from Hong Kong. How is Hong Kong different from Singapore from the crypto regulation perspective?
I think MAS is a branding authority. It's not a regulatory authority per se. They do a lot to brand themselves as a regulator and push Binance out. I'm sure Crypto.com actually has public view on that as well, which is public.
We can chat separately.
and 5% of FTX users in Singapore, because Singapore allow retail to trade crypto. They try to brand themselves as a leading exchange in Asia, try to push regulations too far away. But Hong Kong, obviously from Hong Kong, right? So we're trying to protect investors and allow professional investors just to trade crypto for the past several years and start to open up consultations for retail. Well, whoever say that a regulator is being slow in crypto, perhaps don't understand about complexity of crypto. And I'm sure Japan actually was pretty pioneer in 2017 and started to kind of step back a bit and relearn about the process, right?
Yes, because Japan had the first two major collapse of exchanges in the world.
Yeah, but as a matter of fact, I knew a lot about Singapore because we explored Singapore as headquarters. We explored that, but we retain Hong Kong not because I'm a Chinese or a Hong Kongese, but just because Singapore trying to be comprehensive and you're trying to be everything at the end, you achieve nothing. That's Singapore.
Yeah, so I'm gonna add something here. So I was gonna talk about MAS in Singapore because lawmakers, policymakers here in Taiwan is a little bit slow, but I wish there's they form up a group to do all the researches to make all the right regulations, just like probably like MAS or in Japan or somewhere maybe Dubai. Yeah, so we really need a national champion on Web3 in terms of projects or companies, because everybody in the world recognize Taiwan probably because of TSMC, right? Semiconductor, like giant mega firm. So I was working there, so I know the impact. How was that? And we recognize why Silicon Valley is a hub of all the venture capitals, because all those giants, tech giants, Google, Amazon, Facebook, you name it. So we might need national champion in Web3 industry here, no matter in Taiwan, in other countries, regions. But by doing that, with all the policymakers, all the venture capitalists or other investors, so we can push one champion and then to lead the industry going forward.
Right, but before we spend the last 5 minutes, as I just throwing any questions aside from the floor, I guess as we are talking about the catastrophe that took place as this year, and of course we all have realized as three major companies without mentioning the name of the company, have experienced a huge catastrophe, which of course makes 2022 one of the worst year ever in the Web3 history space. Now, with all these series of debacles and fiascos that has been taking place itself, I guess and of course, I think a lot of people also are anticipating a huge major financial crash next year. I don't know, we can debate on that. But what does this really mean for VC investment, and what are the new metrics that VCs will be looking forward to from now on?
I'll probably take it first. So, been there, done there. So 2022 probably worse than 2018, 2019 bear market crypto winter. But combine macro economy drop. So, but still, as a VC, just sit on it. Because a lot of projects disappears. A lot of noise also disappeared. So who is keep building that? It's probably good projects, good founders. So you just spend time, accompany them, and then try to provide some help. And then we believe in bear market. So all the big hits we met is basically invest in bear market and then cash out on in the bull market, right? So we can possibly find next 100x winners in this market. That's what I believe. Yeah, just share to you guys.
So just to put everything in a historical perspective, I'm actually the survivor of the first dot-com bubble. But I remember back in 1999, I actually spent a lot of time in San Francisco. Then you go to all those dot-com parties, and some of the startups actually had office opening party where the door prize was a Porsche. It was just crazy. And then you go to those events, and you meet a lot of people who have zero tech background. I think, oh yeah, I just moved from Texas last week, and what did you do before? Oh, I was working in completely unrelated non-tech industry. There's a whole bunch of people, which I think it was very similar to what I felt in crypto last year. There's a lot of people.
And now we're seeing that in Dubai, actually.
Yes, exactly. So basically, I think a lot of people were drawn to this industry last year because of the boom, and some of them perhaps not very good intentions. And but what has happened is that this is a great time to actually get rid of all the fluff. And I think people who are looking for short-term gain, many of them are hurt and left the table. So now I think who is actually here today are probably people who are more serious about building something. And I think that's where what Ivan just said about 100x opportunities lie.
Yeah, so if you think about the backdrop here, right? So you had Luna start of the year going into 3 arrows into FTX, and then over the past few weeks, even though the FTX collapse happened almost a month back, you're starting to see exchanges and market makers start coming out of the woodwork and saying that, oh, our entire treasury was on FTX, right? Projects that raised a lot of money in the previous cycle are starting to say, okay, we had a substantial portion of that in FTX, right? So these things are slowly coming out of the woodwork, right? And this is driving institutional adoption away from crypto and retail adoption away from crypto. And I think against the broader macro backdrop where macro is worsening, the rates environment is not so good, I think we have to be prepared for an extended winter, right? That being said, I think some things that we would kind of think about is how much runway do you have left? How much more money in the round that you're raising is expected to kind of service burn rates going into the bear market. Some of the things that I'll be looking at. And by the time the bear market ends, right, the funny thing is that all the themes, all the narratives would have been completely different, right? Because in this space, every other few weeks, you're seeing a completely new narrative, right? So yeah, that's something that I would think about.
Well, I reckon the failure of this bull market is actually not caused by the project. It's caused by investors. 3 arrows, FTX, huge investor in the space. So I think the bear market is for investors to relearn about how to invest. Ironically, none of the investors, I think 90% of the investors don't know how to invest, probably including myself, right? So to look at the metrics to invest in portfolios in a bear market should be no different from a bull market. You look at a number of users, probably you should look at the bull market as well, but we flock into deals just to being FOMO'd, right? So we should, I guess portfolios and investors are adjusting their mentality in terms of when the portfolio should invest or should fundraise. So could Min make a reference on traditional how startups should raise money, whether it's from seed round to round A, what kind of metrics you should look at, whether it's a token or equity or not, it should make no difference. So I think it is a key change in bear market for every one of us, whether it's investors or project, when you talk to fundraising. But obviously, you shouldn't expect a seed round portfolio to have number of users and revenues for $10 million valuations. I guess at the end of the day, it's about making sense or not.
I agree actually with Adrian, especially I think people actually forget just the fundamentals of business, right? There are projects that has crazy valuation. Then you look at their user base. Wow, that's like, maybe tens of thousands, and has crazy valuation. Then you look at actually today, like even OpenSea, which is the largest NFT marketplace. I think last month their unique wallet address that was accessing their service was only like 300,000. That's tiny. When I remember .com market crashed and eBay is one of the survivors. They have way more users than OpenSea has. I'm talking about way back in the year 2000. So I think as investors, we often are investing on our future expectation of what this could be, but at the same time, we actually have to perhaps be more grounded in those fundamentals. And this is definitely a good time to think about how to adjust our expectations in terms of valuations and actual traction, especially not for seed project, but for things that are much later stage.
Fantastic, gents. Are we good for another 2 minutes to just have any question from the floor? I believe this is something where the project builders will be super excited asking. Can I have that gentleman right over there? Oh, that's right. Yeah, there are only two gents. Yes, the one on the mask. Yes, absolutely. Yeah, coming over to you.
Hey guys, thanks for this discussion. This was awesome. My question is a follow-up of Arthur's question. So given the catastrophe, has your methodology for due diligence changed? And I guess specifically, any differences in how you guys look at valuation now?
Yeah, valuation side, there's one thing we check more now is that if the company says, oh, we got commitment from XYZ investors, we actually verify before we invest because we are very worried about investing into a project that has no runway.
Yeah, totally agree with that. So we oftentimes invest in the project. It's just like I mentioned, right? If you last to 4 months of runway, we're probably not gonna invest in you because we want to add some colors on your project, but not just give you some help when the darkest dark, right? So eventually, we invest in people. So in those smart teams, really good technologies. So I would say that during the time, just valuation-wise, don't set your valuation too high at the moment, right? You just raise for a little. You just keep your 1.5 years runway, and then don't sell your share too cheap, right? Right now, why? If you have faith in your projects, just wait till market recovers for a little bit. You just secure enough runway for yourself right now, and then search for right, partners, VCs, investors to go through this journey with you.
Are there any questions? Yep.
Last question.
Thanks, guys. My name is Kelvin, co-founder and CEO of Pons AI. We're basically an AI generative digital collectibles platform for brand marketing. We're from Hong Kong, actually. We're based in Hong Kong Science Park, and we showcased at Web Summit and also Google Cloud, Web3, that kind of thing. I just want to get your thoughts on generative AI for the open metaverse. Do you see it's a big opportunity to sort of populate the open metaverse with sort of 2D or 3D NFTs that could be of interoperable use cases? Thank you.
Yes, actually, we do invest in this space. One of the portfolio from fund is called Wombo AI, and they are actually one of the early players. They started from, they're a little bit different from more professional market generative AI that people are talking about a lot in Silicon Valley, but they actually went after consumer. And they have a very large number of downloads and active users. But I don't think it's just one company dominates all. So I think there's definitely, space for this market. But you need to figure out what the right combination of the technology and usability and how you offer that to the people who actually need it. And I think people are still figuring this out, and hopefully you guys are one of the players who's going to make it.
I actually, wait, is it generative AI for UGC or? Oh, I see. Well, I think you could have a market because one of our portfolios who is always working with brands and partners to generate content in the metaverse actually costs a lot of money for them. And actually, if they don't have a template to customize, if you don't have a template, so you have to customize every time. So generative AI might work, but a generative AI, metaverse, all are buzzword in the meantime. So I can't see whether. I personally can't see whether it is practical or not for now, but probably Akio will know more than I do.
Once again, to all our Web3 friends out there, project builders, you just have to survive for the next 12 or probably 18 months until the next bull market. Focus on the primary metrics. Imagine when you build your project, your Web3 business, things of some of the primary metrics that what you really need to adopt in your business. Oftentimes, as I always say, that imagine like you're just setting up a business, just setting up a store, and how to make revenue, how to constantly create more values to your users, and also generating revenues as the time goes by. So with that being said, once again, it's absolute pleasure to be moderating this session, and thank you so much, Jen, for giving all these major takeaways, and I hope each and every one of you experiences the same takeaways from this session. With that being said, thank you so much once again. Thank you.